Good morning, everybody. I hope everybody can hear me now. What I would like to do this morning is I'm going to go through, or this evening, I should say, I'm going to go through the current status and future vision as we see it today, which really supports the comments of the two previous speakers. And then I will go through a little bit about Marco Polo, some use cases, and hopefully give a good understanding of how we're progressing with Marco Polo and with the various banks that are involved in Marco Polo, including SMBC. My first thing is to look at the industry challenges. And industry challenges, we really have worked very hard with our banking community to understand the challenges that corporate treasurers have. And a lot of them come down to, three major themes. And again, this is obviously being completely amplified with the events surrounding COVID-19. One is that they've got to be in a position to sort of cut costs. And cutting costs means basically doing more with less. Second thing they must really look at doing is how can the corporate treasury support the compliance? How can they actually be more compliant? It's not an external issue, it's also internal. It's also making sure that they're complying with the policies that they have in the things such as working with their ecosystems of customers and suppliers in such a way that they're driving sustainability, inclusiveness, and also corporate governance issues. And then, of course, the most important thing is they need to support the company's growth in revenue. So this is quite a challenge if you think about it. You've got costs that need to be cut. You've got increased costs by making sure that you are delivering an infrastructure which really supports the corporate compliance issues and also external regulatory compliance issues as well. To do this, we believe that technology is absolutely the answer to this. It allows everybody to do more with less. And in fact, we're starting to see that as people have worked remotely over the last 6 months with the advent of COVID-19. To do this, we see a couple of things, or a number of very big keys that actually do amplify and give the opportunity to make sure that this is a reality. One is there needs to be an ecosystem of connectivity, and that connectivity cannot be a connectivity which takes a lot of cost, a lot of time, and a lot of IT resources to achieve. It needs to be done in a way that's very simple to onboard into a network and have an expansive view in a private and permissioned way to all participants, external participants, that a corporate would work with as they work through their purchase to pay and order to cash cycles. The way that we need to deliver this ecosystem is through automation, making sure that as many of the processes as possible can be automated and executed off defined contracts and workflows. The third is we need to look at better access and use of data. There's a lot of data out there, but it tends to be very, very siloed. And therefore, being able to, if you'd like to bring this data together and use it in ways which actually help drive things like compliance, understanding customer behavior, making sure that you're providing the right reports at the right time efficiently through automation of the actual data that's in use is really important. And a key to all of this, and in fact, none of the above can really happen without digitization. Getting away from paper, getting away from a PDF that has to go through an OCR scan and then be imported by a third party is really, it's costly, it's it's fraught with mistakes, and is not efficient and doesn't work. So moving to a fully digitized process is absolutely imperative. And these are the challenges that can be met through technology. So if we look at the outlook and the main challenges that both banks and corporates have, we actually took 6 outputs from a Deloitte industry study that they did. And some of these apply to banks, and some apply to corporates, and some apply to everybody. We looked at, things such as the looking at customer centricity. We looked at, in other words, where is the customer? And a customer, quite frankly, can be an internal customer. It could be Treasury looking after subsidiaries and their customers being the procurement organization, the sales organization, etc., and making sure that things are aligned through the organization to basically manage their days payable outstanding and obviously their days sales outstanding. Regulatory collaboration, as I said before, that is both internal and external, and being able to provide the visibility and transparency to meet the requirements of the corporate and the bank is very, very important. Making sure that the technology can be managed in such a way that we don't go through a very expensive exercise of keeping everything in-house, on premises, having to maintain a very large IT organization that is somewhat supported by expensive third-party help. Being in a position that you can move in a very agile and flexible way through technology management is an absolute key to supporting the transition to a digital environment. Maintaining and mitigating the cyber risk is really important. So being in a position where you are communicating, you are transparent, and you have all of this, somewhat needs to be considered in the environment of cyber risk, and that is a real key. Working with and understanding how fintechs and big techs can actually support the whole move to a digital, integrated, more transparent, more connected environment is absolutely key. No one can do this alone, not even fintechs. We all collaborate with various partners. It's really important that we find the right partners to actually work with to achieve the objectives. And then, of course, the last one, which is really important, is reimagining the workforce. The way in which people work today is going to be different to the way in which they work tomorrow. And nothing has amplified this more than the events of COVID-19. So again, as I said before, the four key areas that we actually call out, we believe in part of the Marco network, is really how do we get customer centricity? How do we get channels that can actually interoperate with one another, where the information flowing between the channels is in such a way that it's what I see is what you see is what I see. There is absolute provenance of data. There is absolute trust in the information that's being produced. We also have to get into a situation where we're not obsessed with a product and sales focus. What we're obsessed with is how does the information flow through the organization so that we can generate better outcomes for our sales and various products that we're delivering to our customers and suppliers in which we work with. In other words, reversing the focus. The target, the right markets, what are the right segments? Where do I start with this digitization process? Where can I get the most value to begin with? And how can it impact the customers that I'm working with? And again, from a bank, this is their customers that they work with. From a corporate, it's your customers you work with and your internal customers. And I emphasize internal customers, because giving better tools and better flows and better ways in which they can work actually leads to the cost reductions and efficiency improvements that we were talking about before. If we look at the regulatory collaboration, this is really important. There are complex business models today: anti-money laundering, KYC, know your customer, regulatory reports that need to be done, making sure that the underlying transaction was really a transaction that did occur and that was transported, making sure that shipments did not go through any sanctioned country on the way. There's just so many things that need to be actually addressed in a complex way of providing the information to regulators to ensure that the business is done in a way that's incredibly transparent. Plus, there are new rules. For example, in Europe, we have PSD2, which is the interface between the banks and an open banking network to corporates. But there are many other things that are actually starting to emerge. We also have data jurisdictional or data residency issues. And this is becoming more and more important as the world is becoming a little bit more polarized from a macro political point of view. So again, there's some results are that regulators and regulators and compliance officers require more transparency, and they require it in real time, the data in real time. The other issue that we see is we look at technology management. We said before, managing legacy infrastructure and trying to actually join this legacy infrastructure together by connecting it better through API layers, etc., is really, really hard. In some cases, a lot of systems are basically past their use-by date and need to be actually replaced. But they don't need to be replaced by like systems. They should be imagined in a way that is open and allows for the digitization flow and workflow and automation of that workflow to execute based on the code that is delivered, not the people having to interface with the actual systems. So better software and tools is really important. Modernizing that infrastructure is absolutely an imperative and a reality going forward. And many corporations are going to have to look at this. So jumping from doing something incrementally to doing something a little bit more visionary is going to become a necessity and no longer going to be a risk. In fact, the risk is going to reverse. If you do something incrementally, the risk is that you're never going to catch up and your competitors are going to be way ahead of you in the future. So therefore, the risk of doing something really small and iterative is going to be much higher than doing something that is more transformational to move to a truly digital environment. And of course, the last thing which is really important to us is cyber risk. We believe that having centralized databases, third-party intermediaries that can intermediate the data and provide services to you adds tremendous risk. It gives a central point of hacking, central point of data loss. In many respects, is not going to work in a real, truly integrated digital environment in the future. Our future is really, if you like, decentralized networks that are driven by blockchain technology, whereby the ability for somebody to hack a system and to get access to a lot of data becomes harder and harder to achieve. So again, just really quickly, corporates and treasurers' views on emerging digital environment. If we look at, just took some takeaways from the Deloitte study that was done. There's still a high level of trust with corporates and their banks, and we believe that trust can actually be amplified and can continue. But banks need to move faster into a more digitally connected environment, which actually assists the corporates. We also, we believe that more and more corporates, as we can see, are interested in using new digital channels, right? However, there are a lot of differences between the different digital channels. Do I employ an intermediary that does the work on my behalf? Or am I capable of running the technology and consuming technology which doesn't rely on intermediaries and the risk of data leakage and trusted information leakage? So we believe the role of the bank is still incredibly important as a sole trusted advisor, but it is somewhat eroding because of the advent of fintechs. And this doesn't necessarily need to be the case as we move into the future. The corporates, CFOs, if they talk to us, they look at things like, the balance of technology advancements and personal interaction. How do they fit? So moving from an environment where I'm really dealing with exceptions, I'm dealing with things that people need to deal with because they're outside of the contract logic, which is executing across a network, for example. They need to look at things that are more agile, flexible, and they can respond to industry needs and industry requirements. And again, nothing has amplified this more than what has happened in the last 6 months. And more importantly, they need to run their business 24/7 in a digital and proactive way. So to be able to support that in a low-cost environment with a high productivity output is something that we believe a truly digital environment for interaction between your supply chain and your customers in the future delivers. Obviously, the impact on the banks is actually quite considerable. The relationship manager era is really, in many cases, over. It's really about how you work with how a bank will work with their customer in this environment, how they will deliver the technology and the experiences and the knowledge to get to them the right information, the right services in a way that supports their business going forward. And a data-enhanced senior banker working along with an agile team is what the relationship manager is going to transition to. Winning the trust battles, the adoption of zero manual interaction model is really important. Elimination of low-value intermediaries, as explained before, is really important. All interactions between trading partners, banking partners, based on a private and secure trusted network is what the DLT, distributed ledger technology, or blockchain will and is delivering. If we look at pain points, the corporates, there is actually a divergence when this survey was done by BCG, and they were looking at what's the bank's view and what is the corporate's view. In many cases, they do actually align, right? They do align from the extremely high value. But a couple of things to call out here, which are quite interesting, is the bank's view still is nowhere near as important, the same as the corporate's view when it comes to paper-based or manual documentation. There is an awful lot of financial institutions globally that still rely on paper, and paper at the end of the day is not a trusted format for the delivery of information. The corporate's view is very clear that the value of delivering a digital experience, right, is really important to them. The limited connectivity between partners is another thing that we look. A bank is saying, well, actually, it's not really, it's not that valuable, right? Not all banks, obviously, ones that are involved in global trade see it in a very different way. But when we move to the corporate, the connectivity is very important to them, actually significantly important. So again, there is this divergence between sometimes a bank's view and a corporate's view, but generally at the end of the day, a number of these are aligned. If we move to the biggest pain point for banks, right, the connectivity, it actually kind of fits the reverse of what we saw before, because the connectivity between parties is really important. That is going to drive costs down. It's going to give a better source of data and a greater opportunity to provide services, whether they be financing services or transactional services. The high operational costs is really important that this is driven down. And again, to drive down high operational costs means that you've really got to do less. You've got to do a lot more with a lot less. And technology driving that is really important. Technology driving it in a way that really reduces the number of errors, the number of human intervention, the amount of human intervention that's required is really important. So you can actually move a lot of staff to really high value areas, areas for customer interaction, high value areas for mitigating and remediating any exceptions that handle, and developing new services that could be delivered in this digital environment, right? So, and then again, again, the moving down to things like the complexity of KYC and compliance is really critical to a bank. Over 78% are basically looking at an environment where they need to do know your customer. They need to be able to have know your customer processes that are real time, consistent, not just once every month or once every quarter, but are actually really happening in real time. And this needs to then translate into compliance reporting and compliance visibility, whether it be internal or whether it actually be to external regulators. This will reduce their possibility of handling transactions which maybe should not have been handled and actually went through the system, resulting in significant fines and regulator issues. This will result in reduction in the cost of auditing, whether it be internal audits or external audits. So again, all of these things can affect cost, risk, and revenue. If we look at the rise of platforms right now, platforms have created an opportunity to actually reimagine business. So if we look at external platforms such as Amazon, what Amazon Web Services have done in delivering and positioning platforms, but platforms through social media, platforms through Amazon Marketplace, Alibaba, etc. So the rise of platforms really has mattered. But all of these platforms tend to be a single point of entry, centralized data, which is not necessarily the way a platform should be imagined for a bank and a corporate handling financial transactions. We need to look at open protocols. One of the great things about distributed ledger technology is that, and again, specifically Quarter, is that we can actually now look at what we call states or various stateless calls over the Quarter network, which basically is very akin to looking at something like, for example, in mail where you've used SMPT, right? So again, we can actually move to actually help the industry standardize on the messaging formats and actually make them, a little bit open to meet the needs of various industries or different counterparties. So there's a greater opportunity for open protocols to actually work in an environment such as using blockchain technology. Secondly, anybody that does this needs to be able to be open, needs to produce a design which allows for somebody else to build on a network by providing various microservices, providing a modular design, on-ramps, off-ramps to the network, which make a lot of sense. And obviously, the two last ones I'll just emphasize, which are massively important, is the ability to work on a cloud infrastructure that needs to be multi-cloud infrastructure, and it needs to be global, because we need to solve for data jurisdictional requirements of data. We need to be in a position where various countries are using, or the predominant cloud provider in one country is different to another. So working on a multi-cloud infrastructure and then using that to connect to cloud-based ERP systems and other cloud-based products which are today delivered is really important. So the integration by, first of all, deploying on cloud technology and then integrating through to other tools and services that customers are actually working with is absolutely critical, and to do this seamlessly. And of course, all of the fundamental underpinning to this from our point of view is distributed ledger technology or blockchain. Let's go to how we use it. If we look at Micropolis today, Micropolis was founded in 2017. A group of leading financial institutions. SMBC was one of the leaders and founders of the network. It is large and it is growing. We have well over 30 financial institutions on the network today. We have numerous corporations that are on the network that have tested, that have transacted with pilots, etc. And as we go into live production right now, many of these corporates are transitioning from all those tests that have been done over the last 2 years as we've built out the network. The network is designed to have millions of participants on it. A participant being a business, whether it be an anchor corporate, anchor bank, or a small supplier, small customer. The idea here is it's multi-bank, multi-product, multi-jurisdictional. The way if we look at this, it's really got three layers to it. It's got the core infrastructure, the core network, which is peer-to-peer permission communication between counterparties on the network. And we have the actual underlying platform. If you think of the underlying platform, that's like iOS or Android onto that actual network. The network being the GSM network, if I use the telecommunications industry as or mobile industry as a analogous for this. And then on top of that, we've got our modules and applications. And one of the things about Micropolis is we will not be building every single application and module. In fact, we have companies now that we're in late stage negotiations to start building things such as insurance apps, logistics, etc. So this diagram down here really shows Marco Polo working with core banks, buyers and suppliers, and then providing a whole ecosystem of apps which can actually drive more and more value to the actual corporates going forward. As I said before, one of the most important things with this is the differentiation between a destination platform and a distributed network. A destination platform is a single point where all users, be it large corporates, their suppliers, etc., must log on to a central platform, and all data is shared and communicated on that central platform. The problem with that is that there is a single point of failure. There is reliance on that single platform. The integration, again, can be costly and often bespoke. There is also things such as data privacy, data custody, etc. So at the end of the day, we really don't think, and again, if you think about jurisdictional data residency, we really do not think that destination platforms really solve much at all going forward, although they have a purpose. If we move more towards the distributed platforms, such as Marco Polo, Contour, etc., it's a distributed network. So everybody is their own participant on the network. Their data is theirs, and it's permissioned and shared with whatever counterparty is involved in the transaction. So this basically eliminates a vendor risk. It creates resilience because one node could go down, or one data center could go down for a few minutes, and the rest of the network has no effect whatsoever. It gives the control to the large corporate to work with very, very large counterparties where it's very, very sensitive data, down to very, very small participants, which basically the data is not necessarily sensitive, but it gives them a single point, a single way in which to communicate with their ecosystem. And the ecosystem, as I said before, can be very large. It can be many of their supply chain, many of their customers, many banks or financial institutions, port authorities, insurers, logistics providers, quality assurance companies such as SGS, companies like the Rainforest Alliance getting certificates, etc. All of these are and will be members of this ecosystem, but the connection is on a peer-to-peer trusted basis. What I see is what you see within this network. So again, just summarizing, as I'm about to run out of time, we have three big things that we focus on: privacy, scalability, and producing this in a way that we reduce the cost to the lowest point, so that the smallest participant, the one person supplier supplying janitorial or cleaning services, for example, could actually work on the network, send their invoices, and get paid or get early payment on the actual network itself. So we can go to the lowest possible participant. We can scale to many millions across every country, and we can provide a private way of interacting by using Quarter in a peer-to-peer permission network. Again, we leverage blockchain. We connect to all companies. Our mission is to make sure that it is available to any company, no matter how small or big they are. We can look at multiple funding through your banks. Again, this is just going to grow and grow and grow, not just because of the work we're doing, but because of the work some of our partners are doing. We're looking at a unified experience, so you're not logging in or running multiple applications. You can run applications to actually access multiple parts of your requirements, whether it be receivables discounting, asset-based lending, purchase order financing, etc. So again, to do this, we created three major themes. We created payment commitment, supplier pay, and receivables, and they focus on risk mitigation, purchase to pay, and the order to cash cycle. It's been successfully tested, and a number of very case studies, which you'll see in the material that we've actually seen before. So over 2 years developing and bringing where we can deliver it on a multi-cloud environment on Quarter, large and small corporates and banks in the banking community globally. The key areas that we've focused on are for both intersect corporate and bank. It was no good for us just to focus on a bank's requirement. We worked very hard with our core banks that started Marco Polo, and we really started to focus more on what their corporates needed and how their corporates could work, but at the same time, how they would work into the bank. So we really drove the intersection between corporate and bank going forward. So that brings to an end my 30-minute presentation, and I thank you very much for the time to present to you, and please look out for the continued successes of Marco Polo Network over the coming months.